What's going on, guys? We've got another podcast coming at you from the Commercial Real Estate Blueprint podcast. We've got an episode today, just Graham and I, just shooting you guys straight. We had a bunch of people lined up, and we're super excited because we have a couple of really phenomenal guests about to come on. But schedules haven't worked out the best. We've had to reschedule a couple times, and we're going to get them on here in the next couple of weeks. So the next couple of weeks, we'll be back to our normally scheduled program, but we wanted to keep adding weekly value to you guys. So we wanted to jump into a topic that we haven't really talked about. We're going to go through a checklist of the components of an industrial building. I know it sounds really simple, but these are very important things to know, especially if you're going to be investing lots of money and time into this asset class. So I appreciate you guys coming on and listening today. We've got a couple minutes, so we're just going to jump right into it. Let's do it. So
yeah. No, I was just going to say it's one we've talked about this a bunch before, but me and Jesse like simplicity. Yeah. And so we found ourselves kind of repeating our questions and going to tours with property owners and also listings too, and being like, shoot, we forgot to get this. Shoot, we forgot to get that. Shoot, we forgot to get this. So 100%. We just made a simple one-pager form that we can take to every single appointment that basically asks the questions of what is on an industrial building. And this can apply broadly to more than just an industrial building, but since we've been so heavily focused on industrial, it's mostly just industrial stuff. But I mean, sure, office building, retail, whatever would have a lot of these components as well. But we just wanted to go through this list. We think it's good. And it saves you a lot of brain power and time.
100%. I think the biggest thing that happens for me on tours is that I get a little too into the conversation and I get distracted from that conversation and having a checklist that I can go back to. And I think that also takes the pressure off of the seller as well. He feels like he's just getting bombarded with questions that he feels like he maybe should know and he maybe doesn't know. And if you have a checklist, I feel like that kind of takes the barrier down a little bit on that.
100%. 100%. And one other, quick pro tip before we get started. A lot of people at City Plat, including us, have been using what's called a plod. And plod is basically like a little, there's two types. There's one that looks like a little like pill almost that you can clip onto your shirt. And it's basically a microphone that records your appointment. Or you can slap basically like what looks like an Apple Wallet onto the back of your iPhone. If you have an iPhone, MagSafe. There's two forms. You can get either one. You click a record button and then you walk through the whole appointment. It records the whole thing like a mic. And then afterwards you can get a very detailed, you can get a transcript or you can get a summary. And it's wild. So like if you go through and you're like, yeah, Mr. Seller, I'll send you an offer later today on one's seller financing, one's cash or whatever. Afterwards, it'll be like, action items, send seller, financing offer and regular offer. It'll give you a whole list of like, here's the questions they ask, here's the questions you ask, here's what you need to do. It's pretty wild. It's pretty wild. It's definitely super helpful because you could take this checklist, you could ask all these questions, you don't have to write them down. The plod would just catch them all and then you could go back and look through it. But yeah, another thing about the checklist too is a lot of it is like what tenants want, which is kind of what's important. Like, yes, we need to check it as investors, but really like when tenants are asking like, hey, what's the clear height? How many dock doors are there? Yada, yada. They need to know because a lot of these businesses have very specific requirements on what they need and, how they operate their business because it's mostly logistical stuff.
That's a great point. And something to think about. You need to know your area and what most people in that, if your area is predispositioned to need more drive-in doors, if it's say next to a raceway, or if you're next to the furniture market like we are, and you need more dock doors because you have a lot of big box trucks, big semi trucks, 53-foot access, you need to know what people in your area really need more, what's in demand. That's something you can be asking brokers.
100%. You also just brought up a point that we need to add to this. We need to add a section that says like, can a 53-foot trailer fit in the dock? Yeah, because we've had tenants not lease buildings because it's a little too tight and a 53-foot trailer cannot back up to it.
Yeah, great point. Great point.
Yeah. So yeah, without further ado, I guess we'll just jump right into it. The first whole section is basically, let me see here. So we have seller asking price. It's a property overview. So a lot of the stuff is basic. A lot of the stuff is like, oh, you know, no crap. You don't even have to ask this stuff. But like we said, it's nice to just have a sheet that you go through and ask every single one of these questions, and yeah, it just takes the thought out of it. One other quick thing I forgot to mention too. One of our good friends, Taj, who we're going to have on the podcast at some point soon, he also recommends using the Meta Ray-Ban glasses. He will actually go through, he'll put them on his head. He'll tell the seller, hey, do you mind if I film a quick video while I'm walking through? And then he'll film a video of him walking through. And that way he can go back and he can visually see everything. So it's not just audible. It's not just the transcript. It's like you can visually see everything in the tour. And I feel like that's a great idea.
For sure.
Great idea too. But yeah, so property overview. First thing is, the asking price. You want to find out what they're asking. And this sounds simple, but I'd say 90% of the time the seller will not actually give us the asking price.
It's definitely a high number. I don't know if I'd go quite to 90%, but it's plus 75 for sure.
Yeah, and particularly if it's off market. If it's on market, then they're going to have an asking price. But
yeah,
if it's an off market deal, a lot of times we call these people and they're like, I don't really have a number in mind. You called me, you make an offer, and you try to drag it out of them. We'll ask like 4, 5, 6 times, and it's very tough. It's very tough. Yeah. One tip for that though, one of our buddies does, which I think is pretty good, is you can anchor on the tax value. Mm-hmm. So if you go to a building and the tax value is $1 million, you can say, well, the assessment of the county assessment, it's about $1 million. Like, is that within the range? And that way you can at least gauge, like sometimes they'll be like, oh, heck no, like no way. Because a lot of times in the past, tax values have been wildly off. There's been a huge discrepancy, especially like in Durham. You'd have a $500,000 tax value, but the building's really worth like $1 million. However, they just reassessed. A lot of places just reassessed. Check your county, but High Point did. And the values are jumping up closer to actuality. So now's a good time to actually use that as an anchor. But it can go the other way where they say a property's worth $3 million, but really everybody knows it's only worth $2 million. So careful when you use that as an anchor that you're not using the overshot price, but I'd say 9 times out of 10, it's going to be undershot.
Yeah, for sure. I think something to say too, and this is part of like going back a little bit to the track record. We've had a lot of people say, just make an offer like Graham had just mentioned. What we have said in the past, and I'm literally looking at a text right now saying, hey, I spoke to my business partner. Serious buyers, not a tire kicker. Is there a ballpark number? We've bought over 100,000 square foot of industrial in the last 2 years. Immediately gave me a number of a ballpark. He said, I turned down 1.2. It went from make an offer to, hey, we're legit people. I'm not trying to waste your time. We've done X, Y, Z. Okay, now I finally got a ballpark number. We got close. I was able to set up a meeting after that. We got an actual number from him, and now we're negotiating an offer. But that just goes to show you got to keep pushing to get that asking price.
100%. Sometimes you have to ask 3, 4, 5, 6 times.
1,000%.
Yeah. You want to hit him with the next one? Do you have it pulled up?
Yeah. So next thing you want to ask them is a reason for selling. This could change everything in how you structure your offer. If somebody wants to sell, but they specifically note they don't want to have tax burden, or they want a quick close, like there's just so many different things. If somebody says tax, my mind automatically thinks seller financing. If they want a quick close, okay, who do I know that can do cash that could get this closed quickly? Do I need to do a bridge loan? There's so many different things to go into that.
100%. It's like, if you guys know who Pace Morby is, he's a beast, but he talks about this is like, basically this is the gold mine. Why they're selling like can dictate everything. A lot of people want to sell, like Jesse said, but they don't want to get hit with taxes and they want to retire and then we'll go sit on the beach. Well, that's perfect for seller financing. If you're good at articulating it and telling, well, some people just got a divorce and they don't want to be involved with it for a long time. They want to just, be done with it, clear their hands. And that could be a candidate for a quick cash or whatever hard money closing where you're doing it in like 30, 45 days and you might be able to get a substantial discount because you're able to move with speed. So that's a massive, massive thing that you need to ask. I also feel like we said before, you know, if you're standing there with a clipboard and a sheet and you ask them that, it's less threatening,
Yeah.
for sure. Like instead of being like, well, sometimes people get defensive, but if you're standing there with a checklist, like, yeah, these are just some questions I asked when I tour a building, and then you just ask it and you look at them and you look down at the paper, like, you're going to fill it out. They're going to answer it probably, and they're going to feel a lot less threatened. They're probably going to feel a lot more comfortable. The next one, I think, I need to move like towards the bottom of the sheet because I don't think you want to open with this, and I probably will do that. But it's, will they finance? Will they sell or finance? And I think that's an art in itself of when to ask for it. You definitely don't want to ask it on the third question, like, and you don't want to do that. So I definitely need to move it. But you typically want to build rapport with the person, and by the end of it, if you can tell that they like you, then that's when you can, hey, just wanted to put an idea in your head.
Mm-hmm.
You don't say like, will you finance it? You're like, hey, I haven't, this is something we've done with other sellers and it works for them well, and they love it. And then you say, it's something you can think about. And a lot of times they say, well, I don't know. And, some like Jesse, for example, the guy he's talking about a minute ago, he said, I need to talk to my CPA.
Yep.
And I'd say that's mostly probably a good thing. You can say like, okay, yeah, no worries at all. Sometimes a CPA, if they're, real strict, they'll be like, absolutely not, if they don't really know what they're talking about. But really good ones will be like, this actually could help you. So that can be a variable.
The next one is square footage, and it's important to ask the seller what the square footage is, because sometimes there's additions, and getting the breakdown of office versus actual warehouse is another important one, because you want to know if it's, some people have like very strict, like it's got to be 25% or 20% of the building, the office needs to be 20%. And we don't necessarily subscribe to that as long as it's a majority warehouse. Like we don't want an overly built industrial building and that's mainly office. But tax records are always wrong. CoStar is going to be wrong. So most of the time the seller is probably even wrong. If you get a BOMA floor plan, which is what we would recommend after you get under contract, it's going to take into consideration the dock areas as well. So your square footage is going to be a little bit bigger. But if the seller thinks it's 4,000 square foot and it's only 4,500 square foot, and you're buying it on that purchase price, it's another way to renegotiate, especially if the square footage that they're advertising is wrong. If that square footage is 60,000 and it's really 59,000, that's a whole 1,000 square foot, and you're buying it on a per foot basis. It's something you can easily come back and fight. So I think that kind of covers it. But
hey, 100%. Basically, CoStar has a square footage. If you're using CoStar, Crexi will have a square footage. The tax records will have a square footage. And I'd say majority of the time, maybe one of them is correct, but not like, they're normally almost always different.
Yeah.
Tax records is typically different than CoStar. CoStar is different than tax records. And so you have to verify. You absolutely have to verify, because one, you can get, like, heaven forbid your tenant went and measured the building or something and you put the wrong square footage. Well, you could get in legal trouble. But then the other, on the flip side of that, I'll give you an example. We bought a building that was 18,000 square feet. And I believe the tax record showed it like 18,000, I want to say like 200. Okay. So we got it measured and it came back at 18,413. But for example's sake, we'll just say 18,400. So that's a 200 square foot difference. Our rent is $6 a foot. So if you take 200 square feet times $6 a foot, that's an extra $1,200 of NOI a year. You might think, oh, it's only $1,200. Well, you take that on a 7.5 cap or even an 8 cap, that's $15,000. So in that scenario, 200 square feet, it's not as big of a deal. But 15 grand is, that's real money. That's real money. And if you get into larger discrepancies, like 500 square feet, or if that was a 200 square foot discrepancy in a $20 a foot building, like retail or something, that's $4,000 of NOI on an 8 cap. That's 50 grand.
Yeah.
Which is real money. So definitely check the square footage. We a lot of times will actually bring a tape. So like, 100-foot tape and measure it. We don't do this every time. We probably should, but a lot of these industrial buildings are square or rectangle. So you literally just go pull the tape and get your rough estimate. And then we always in due diligence pay for a floor planner or for a floor plan. Somebody actually go out there and measure it. But that can even be wrong too, because a lot of those people just use their phone which is not 100% accurate. What Jesse was referring to before, the optimal is a BOMA. It's a very expensive. Do you remember how much it is? It's like $7,000 depending on some buildings. I mean, it depends on how big your building is, but
I think it's like $8 or $9 a foot.
yeah,
It's kind of how they sell it.
so it's pretty freaking expensive.
Yeah.
But it's like the standard, and we've
Yeah.
an investor we know who owns a lot of property went through and paid for all of his properties to get BOMA floor plans or whatever, and came back with more square footage, which means his portfolio is worth substantially more. So It does matter. But we haven't done it yet, if that tells you anything. We've just gone off the regular floor planner. We'd like to probably eventually, but once we get further in our career. Next one's number of units. If you're buying a single tenant building, it's just one. If you're buying 2-tenant building, 2, etc. That one's pretty self-explanatory. Construction type is the next one. That is, what is it made out of? Metal? Is it made out of brick? Is it made out of cinder block?
Mm-hmm.
That one's pretty self-explanatory too. I don't think there's any much else to say on that one. And then wrapping up the first one of the property overview is number of parking spaces. This matters for sure. And a lot of times it's gravel, so it's hard to count, but you can estimate because some tenants need a lot of parking.
Yep.
And parking dictates the building. Something I've learned in brokerage is you can have the best building in the world, but if you don't have parking, doesn't mean jack squat. Like, you don't really have a good building. Parking matters tremendously, especially in retail. Industrial, thankfully, it's not as big of a deal, but it still matters. Like, we have a building where we have listed for sale in the Triangle area. We had a ton of people interested in it. It's a great price per foot. It's a pretty clean building. The price is very reasonable, but we only had one offer on it. It's under contract. Offer's not at asking, and it's below asking. And the reason is because there was no parking. There's like 3 spaces. Yeah. So that's just not workable. It's just not workable. So parking matters a lot.
Yeah, 100%. I mean, some people will talk about, oh, well, you could build that out and like extend the building and make it even bigger. Honestly, people would pay more, I think, for it just because they want to use that exact space for additional parking and gravel it and put their trucks on it. And parking is just a big thing. I mean, I talk to business owners all the time that have their own building. And it's like, yeah, I could sell and I can move, but there's just nowhere to park any of my stuff. I have 20 employees. Where are they going to park at? That's just a big deal. Kind of moving along at the next section, which is building specs. We've got number of dock doors. There is something to note on this. It's got to be an actual dock door. I don't know the exact height from the ground, but there's a dock door, and then there's a loading dock. There's a lot of different things that you wouldn't necessarily think. Like we had a building for lease that had dock doors, but they were really loading docks because they didn't go right into the building. They went into like an awning, and so they were outside. And then you used like a forklift or pallet lift, scissor lift, whatever, and pulled the stuff inside. So that's something to note as well. That matters for some people.
Mm-hmm. Yeah, and that one's for the most part, pretty self-explanatory. Just how many dock doors are there? And maybe you're listening to this and you don't know what that is. A dock door is basically something that's off the ground by, you should probably know the height, 2 or 3 feet.
Yeah, it's like 3 feet, I think. But
yeah, it's not one you can drive into. It's one that a semi truck can back up to, or a box truck could back up to, and they could unload directly from the trailer into the building.
Yeah.
The next thing about that is getting the sizes, because the sizes matter. There's 8x8, there's 10x10, there's 10x12. There's all kinds of different sizes. So you want to measure that, because the bigger the door, the better. If you have a small little tight dock door, some people might be able to use it. The next one is drive-in doors. So that's pretty self-explanatory. It's a door that's at grade level. Car can pull in, truck can pull in, whatever. And the next thing is the sizes. So the size matters tremendously here, because some drive-in doors are tiny and only cars can pull in, and it's like not that useful. Versus if you have one that a box truck can pull in. I mean, most of the time people are not going to be pulling an 18-wheeler in. That's like a very unique type of building. But they might pull in box trucks. They might pull in vans. They might pull in other just regular trucks that are a little higher off the ground.
Yeah.
And so obviously the bigger the better there.
Yep.
And just for example's sake, we had to put a door in one of the buildings we did, and walk them through the cost of that, or just give them high level.
So that one we did a fire rated door that technically split 2 units. We had to do that because we had tenants on each side and they were different tenants. And so if you obviously had to split them, they weren't previously technically split, even though there was a wall there. But it was basically a grade level door that we threw inside, and it was a little over $6,000 for that because it had to have a fire door, so if it was up it catches on fire, like the door shuts. It's pretty fancy. It's a nice big metal door. I don't remember the exact size of it off the top of my head, but yeah, it was around $6,000.
Yeah. And I'm pulling up a sheet here. I actually have I think I have yeah, here we go. So that it's a similar type of door.
Mm-hmm.
But if they have to, there was already I feel like a big caveat is there was already an existing hole for the door.
Yeah.
So they just had to put it in, install the door. That was about $6,000. I'm looking at, we went to a mastermind. They gave us a sheet of all kinds of different costs and stuff. I pulled it up now. If you have to do a garage door pop in, they said it's about 15 to 20 grand, depending on material and labor. So if you need to pop in a door, expect 15 to 20. That does seem a little high. You could probably, I want to say, depending on your market, you could probably be like 10, but I would say 10 to 20K. And that, just so to clarify, popping in a door is where there's nothing there. So they have to cut into the wall. They have to make sure there's no electricity, like cables or anything like that. If it's metal, it'll probably be easier than if it's brick, but people do it. And if you do that, I mean, you might think, oh man, 15, 20 grand, that's a lot. But if you do that and that signs you a tenant and a higher lease rate and $1 higher because you have a drive-in door and they need it, well, that could be hundreds of grand on your building. So it's probably worth it.
Yeah.
And if you have a great tenant ready to sign a lease, but they need a door, probably worth it.
Yeah. We're going to get into some of the most important, in my opinion, specs about a building here with sprinklered. So industrial buildings that are over 12,000 square foot, majority of the time they need sprinklers. It's not necessarily the end of the world if you don't have a change of use. So if it's warehousing and distribution and it doesn't change, the next tenant is warehouse and distribution, then you don't have to necessarily worry about having sprinklers. But sprinklers are expensive, and for just a 20,000 square foot building, that's probably like 500 grand to put in sprinklers. They are very expensive, and they require annual inspections. The fire marshal comes once every year or so to come and take a look at them, make sure they're up to code, and you have a 5-year inspection. There's a lot of stuff to it. So if they have sprinklers, it's usually a huge advantage because a lot of tenants do need them depending on their use. If they're any kind of manufacturer, they have to have sprinklers. There's just no ifs, ands, or buts about it.
Yeah, that's a huge thing, because if you go buy a building and then let's say it's a big building, like 20,000 square feet, and the previous user, I'm just going to throw out like a random example, was like a indoor paintball or something, right? And they didn't have sprinklers. Well, let's say you bought the building and the paintball people are going to leave. Well, if it's 20,000 square feet, for the most part, the 12,000 square foot is, relative to High Point, I believe, but check with your planning department, whatever the size is for sprinklers. If it's under 12,000 feet, it's probably not going to need it. If it's over 12,000 feet, it probably will. Well, if those people leave and now a regular industrial user comes in, then that triggers with the city what's called a change of use. And when a building use changes, you have to bring it up to code, which means you have to that's code for spending a crap ton of money. Putting in sprinklers, and putting in sprinklers on a 20,000 square foot building, I don't know the exact cost, but it's definitely probably 100K plus. So it's
it's like
big
400 or
cost.
500 grand probably.
Yeah, I mean, it depends on the size of the building, but I think we got quoted 120 or something for a 20,000 foot building. But the larger, like 400, 500, or not 400, 500, 30,000, 25,000, something like that. Yeah, I mean, it's expensive as crap. That's the bottom line. Like, you need to know it's expensive, and if you buy a building that's 20,000 square feet, but then you can't lease it because you have to sprinkle it, That's a deal killer. So that's something you definitely need to check on.
Yeah, for sure.
The next one is clear height, which this is probably the biggest question we get asked, don't you think?
Yeah, for sure. 100%.
And that's basically how high is not the ceiling, but how high is the lowest point. So most people don't measure to the lights because the lights can hang lower, but to the metal, gosh, what's it called?
Decking.
Not decking. Decking's the top, the beam.
Oh, the
rafter,
beam.
whatever. Yeah, that's coming down. That's typically where the clear height's going to be, because if you like pull a forklift or whatever it is, you're transporting pallets, and it hits that, it's not very usable.
Mm-hmm. Yeah, for sure. Next one is something that gets asked more in your industrial, like your institutional size industrial, your column spacing, how far apart are the columns? That's a lesser asked question, but it is important, especially if you're in one of those older buildings and there's a column every 5 feet. That could definitely be a problem. It hurts forklifts moving around. It hurts a lot of things, ability to stack, racking, etc. This is probably, I would say, maybe the second most asked question. Power level, how much power is coming into the building, voltage and amps. It's very important that you actually get it verified by an electrician, because just because it says it on the transformer, or just because it says it, in the fuse box, doesn't mean it's actually there. So to get it actually verified by an electrician, because phase 3, and if you're doing any kind of, like, most people just need like a forklift and they need 240, and then that's pretty easy to have. But if you need any more power than that, it can be fairly costly to get it to the building, or if it's just to the building, that's fine. Getting it inside is still even a costly adventure. So just be careful with that.
100%. So, like, honestly, I don't know as much about the power levels as I should, but somebody who's actually like manufacturing something or running heavy machinery typically is going to need 3-phase power, which is just like a certain level of power. We probably, like I said, we need to probably look into exactly what that means, but there also the outlets too. We should probably add that on there, because a lot of times people ask about the outlets. Forklifts operate off of I want to say 240.
240, yeah,
240, yeah. And so some places don't have that. Most of them do, though. So you want to see how many outlets they have off of 240, and then the regular outlets obviously don't matter as much, but people look to see. And if they don't have that, adding something like a 240 outlet is not terrible, but adding 3-phase power is more expensive. Next one is warehouse conditioned, yes or no. So does the warehouse space have cooling? Almost all of them will have heating. You walk in, like, for the most part, you walk into a building, you might have 1,000, let's call it a 10,000 square foot building. You walk into the office, it's 1,000 feet. The 1,000-foot office has a HVAC system. So, an outdoor unit that goes in there and it heats and cools the office. But then you walk into the warehouse. That space is 9 times out of 10 not conditioned for cooling. It has a hanging gas heater, or 2, depending on how big. Now, some warehouses do have some ductwork and an HVAC system that cools it. And if you have that, you can get higher lease rate, a lot higher lease rate, probably $1 or $2 higher, because that's very valuable. People like it because, some people might need to store certain products at a certain level, or some people just want their employees in the warehouse section to be happy. So that's a big plus. Moving on to the, what's tied right into this is how many HVAC units are there? Is there one servicing the office and 2 gas heaters? Is there one servicing the office and no heater in the warehouse? You want to account for that age, or the number, and then tying right into that, you want to check the ages of every single one.
Yeah.
Yep. You want to check the ages, because if you got a 20-year-old HVAC unit, you probably want to underwrite replacing that. And if you replace it, if you replace it, then it's going to be expensive. It's going to be very expensive. We'll kind of run through the next couple of these quickly, because we have another point we have to get to. But check the HVAC ages, because that's going to be a cost if you have to replace them. You want to check the roof, or ask about the roof age, because obviously that's another big cost. You want to ask how many water meters there are and electric meters there are, because up above we talked about the number of units. Well, you might have 2 units, and I'll give you a prime example. We bought a building that has 2 units. It wasn't meant to have 2 units, but it does. The front is 10,000 feet. The back is 6,400 square feet. The back has no water. It has no water, no bathroom. So we're going to install bathroom, but there's not separate meters. The building has 1 meter. And why that matters is because the front tenant has been paying for it, and because they were friends with the back tenant. But the back tenant's leaving. So now we have to lease to a new person. The new person's going to move in. If they use a bunch of electricity, that's not going to sit well with the front tenant. So
For sure.
you have to reconcile that somehow, whether you put it in your TICAM, which is, taxes, insurance, and common area maintenance, which is what will fall under common area maintenance, or you just have to bite the bullet and pay for a new meter. We got a new meter quote for electric. It was $3,500. Not bad. Water, we haven't installed a bathroom yet, but we'd have to install a new water meter. We haven't got a quote on that. We have gotten quotes on the bathroom. How much was the bathroom quote again? Like 25 grand or 30 grand?
Yeah, it was like 25 grand.
Yeah. Bathrooms are expensive too. We might just lease it as storage. We'll see. But end of the day, count if it's a multi-tenant building, how many water meters there are, how many electric meters there are. More often than not, there is one shared water meter for the entire building and multiple electric meters.
Yeah, we need to add gas as well.
Gas too. Yep, that's right. So basically your utility meters. Because if you can't charge it directly to the tenant, that means you're paying for it and then you're reconciling it to TICAM, and that's a headache. Next is tenancy. You got number of tenants, tenant names, rental rate, lease expiration, and lease type. This is probably the most important thing you'll find out if there's a tenant there. You want to know how many tenants there are, obviously. You want to know who they are. You want to do your research on them. You want to know what they're paying and what that is relative to market. You want to check when their leases expire, because if they're paying $2 a foot and market $6 a foot, you don't want their lease to be expiring in 5 years. You want their lease to be expiring in a month or 2 or 3, maybe a year. And then lease type, because if it's a triple net lease, landlord's not paying for anything. If it's a modified gross, you're going to be paying for everything. 9 times out of 10 with these industrial owners, they're older people, they have modified gross leases at low rates.
Yep. And the reason that the lease timing is important is because you want to be able to force that appreciation as soon as possible. Because when you buy it, and if the leases are super low and they're modified gross, you're going to be having a lot of carrying costs, and it's going to hurt your ability to make the financing work. It's going to hurt a lot of different things. So you want to be able to get it to a financeable position as soon as possible.
100%, 100%. That's, low release rate and locked in can be very bad. But you can also, to Jesse's point he just said, you can use it as a tool to negotiate. You can say, listen, this building is not financeable because you have a tenant at a low rate. Therefore, we have to do seller financing.
Correct.
And the seller financing has to surpass the lease length so that I can stabilize it and then take it to the bank and refinance it. Otherwise, you're not going to sell it for the price you want.
100%.
And obviously, you got to massage the numbers to make that work, but that's another tool. So yeah, hopefully this has been helpful. What I'll do is I will put a link in the description to where you can get this checklist. So if you're interested in getting our checklist that we have, I'll put a link in the description. You can click on it, and then we will send it to you. I'll set up an automation to where it just sends it right to you. And hopefully this was valuable. I think it was pretty valuable. I mean, this is like the nitty gritty tactical stuff that I feel like not a lot of people really talk about, but I think it's great.
I agree. 100%. Yeah. I agree.
Yeah. Well, thank you guys so much for listening. And we will see you in the next one. Next week, we're actually going to Florida to interview a guest who's been on the podcast before, but he's awesome. Very excited about that one. And that'll probably come out the following week. So stay tuned. And then we got another awesome guest who I like a lot in June, who's been up and coming for sure. So got some exciting stuff coming up. Thank you guys so much for listening, and we'll see you in the next one.
Peace.